Hello, friends. Joe Lynch here from the Logistics of Logistics. Thank you so much for joining us today. Today's topic is brokers are drowning in accounting work. How Denim simplifies it with my friend Sean Smith. How's it going, Sean?
Hey, Joe. I'm great. Thanks for having me back.
It is a pleasure to have you back. It's been a while. So, Sean, please introduce yourself and your company and where you're calling from today.
Yeah, definitely. So I am the VP of Product and Client Services at Denim. Denim is a tech-enabled freight factoring company. We work with brokers in the kind of small and middle market and fleets. And yeah, I live just outside of Boston. I have 2 kids and 2 dogs, and my wife and I in our little house in the burbs.
Very nice, very nice. So
I'm turning into an adult, Joe. Like when you're...
my mom used to always say that adults don't make babies, babies make adults. And I was like, that's so true. So you have a kid, you're like, I got to grow up. Anyway, before we hit the record button, we had a long conversation about the freight market, but also some new things going on over at Denim. One of the things we're going to talk about today is this integrated ledger, and you were educating me on that. But we'll get more in detail in a minute. But please tell us about this new thing you guys have going on at Denim.
Yeah. Freight brokers run a very complicated business, and a lot of money gets consumed, a lot of complexity gets created. And so the integrated ledger was one way for us to help make accounting easier for freight brokerages who could be running tens, hundreds, thousands of hours of a given period and things like bookkeeping and CPAs and running up big bills that we don't think are necessary for them.
Yep. And I think we'll get in more detail in a minute, but I think it's interesting how you guys came across this solution. And I don't think most factoring companies would. It's just the nature of the way Denim grew. So talk a little bit about Denim. Who is the sweet spot for you guys, and what problem are you solving for the freight brokerages and companies you work with?
Yeah, so Denim started a little more than 5 years ago with 2 founders in a studio apartment in New York, and we've since grown. As I told you before we started, we doubled last year, and we're servicing freight brokers. I think we're all big fans of Kevin Hill. I think he was on your show last month. He would classify them as somewhere between, let's say, the upper end of the lifestyle broker and then just to the top of the mid-cap broker. So lifestyle, micro cap, growth cap, and mid cap. Those are the areas that we play.
Yep. And so there's 25,000 brokers in the top 3,000, so 3 or 4,000, we'll say. They have a lot of business, and I think you'd recognize a lot of those names. Some are publicly traded. And those guys, more or less, can get their own money. They're big companies. But the rest of the business, the long tail, which you said is growing compared to the guys on the top end, those guys often struggle to get their deals financed. And this business is tough because you got trucks on the road. Those guys obviously need money for gas, for the truck payments, keep those drivers moving. And so they want to be paid quickly. And the brokers don't always get paid quickly by those shippers. And so this is why companies like Denim stepped into the void. Whereas there's always been factoring companies, but I don't think there's always been factoring companies with a tech DNA like you guys.
My mom was a dispatcher for ArcBest for 30 years. I don't know if I ever told you a story. And when I took this job, I told her, hey, Mom, I'm going into trucking. I took a job at this factoring company. And she said, Sean, factoring's been around for a long time. Yes, Mom, I know it's been around for a long time, but we're doing something a little bit different, and we're going to do it a lot better.
Yeah, and I joke about it, but it's not still out of the question that people are saying, fax me that.
Yeah, or mail me a hard copy, right? That sort of stuff. No way.
And we see this across our whole business. There is companies that are digital natives, and then there are the guys who were in business. There's nothing wrong with being an older company that had to adjust and become a digital company. And sometimes it was doing a kicking and screaming. And if you're a financial company, a lot of them have updated, but a lot of them are still moving slow when it comes to the tech.
Totally. And especially, I know we talk about the lower and middle market folks. A lot of that is growth-oriented businesses, right? Like people who are small or lifestyle, and they don't want to be lifestyle for long. And because freight brokerages are a highly, call it, capital consuming business. You need help, right, to be able to make sure that you can continue to grow constrained by how much you have on your balance sheet on a given day. And people like Denim can come in and be helpful and give you a path to keep growing. As long as you keep getting freight, that makes you money.
Exactly, exactly. So, Sean, tell us a little bit about you. Where'd you grow up? Where'd you go to school? Some career highlights before you joined the juggernaut that is denim.
Yeah, of course. So I grew up in the south coast of Massachusetts, little town called Somerset, in an old mill town, part of the world that don't really exist as much anymore in the United States. And I went to a small tech college outside of Boston called Wentworth. From there, I spent the majority of my career in management consulting, and I worked at Pricewaterhouse and Oliver Wyman. Worked with really big financial institutions on some really big problems of theirs, and I'm sure many of your listeners know how consulting goes. You either become a partner or a customer, and I didn't like either of those paths for me. I went to a startup. It was a dump truck brokerage marketplace in Massachusetts. And so we helped contractors and quarry operators find dump truck owner operators. And we were TMS, tracking, document collection, billing, and invoicing all rolled into one for this little market in dump trucks. And we got acquired. And part of the value prop that helped us get acquired was we helped manage cash flow for these dump truck owner operators. We gave them faster payments, and then we allowed slower payments for the contractors and quarry folks. And that float was super valuable. And it's what kind of drove me to join Denim and helping more people in logistics manage working capital.
Yeah, I say this all the time. There's guys like you 10 years ago, you would not come to this industry 15 years ago. A guy who went to a tech school and went through management consulting, which is like getting an MBA on steroids. They're in high demand, and they were not typically coming to this space. So I think it's a testament to what's happened.
No, because I grew up around trucking my whole childhood, and I purposefully wanted no part of it. And so I wasted all that experience I could have gained watching my mom work a little bit more than instead of saying, no way, I want to go build Facebook or whatever else.
I think this was an industry in so many ways that felt like the industry that time forgot. If you didn't want to do anything with tech or anything that was fast growing, you went to a warehousing company or to a freight brokerage. It was overlooked until a little before COVID. And then, of course, during COVID, the whole world realized how badly we need these guys. And we've seen the VC money's faded away a little bit, but it's never going to go away completely because there's a recognition of this huge market. And it's a complicated market. We'll get in more into that in a minute. So you had lots of choices. Why did you choose to go to Denim?
Yeah, a couple of things stood out to me. So at my first startup, we were taking a very old pen and paper business and building it digitally native from the ground up, this marketplace. And doing that for factoring felt like a similar application. I can use a lot of the same skills. So being able to take pen and paper, mail me this, fax this kind of processes and reimagine them basically from like a technology perspective was exciting. That was an exciting problem for me. I'd say the other piece is the market is enormous for freight factoring. And it's of our opinion that the market is still not as big as it could be if freight factoring was better. And so there's a lot of opportunity to bring, I think, out of the woodworks, maybe some untapped market who had a bad experience with factoring companies or we used to have a tagline of just like, we're saying the F word or we're not saying the F word because people really didn't like factoring companies. And so I think there's a lot of room for us to be able to bring people in off the sidelines. And then the last piece is I've really gotten to know B and Sean and have really grown to love them and appreciate their ingenuity. I think they've both been guests on the podcast before, so I'm sure your listeners can go back and listen to those episodes. They're great.
So I will put the link to those interviews with the two founders. So the two founders were childhood best friends and still best friends.
And they still talk like best friends. Oh yeah, sometimes mom and dad are fighting. Everybody just...
Yeah. I think it's a fantastic story. And freight brokerage had a little bit of a, I don't want to say a bad name. Maybe it's, I don't know. I don't want to mince words. I think there was a lot of people who didn't think highly of freight brokerages. When I was at a 3PL, I remember when you'd call sometimes and say, hey, I'd like to talk to you about your logistics spend, or I can help you with your technology or whatever. And first thing they'd say is, do you have trucks? And you say no. And sometimes they just be hang
Click.
up, just click. Yeah. And I don't, from what I understand, I don't sell freight services right now. From what I understand, that has changed. We're seeing a larger percentage of freight go to freight brokerage. And I, in all my stupidity, I believed as tech grew, we would see fewer freight brokers because it would be easier for the carriers to connect directly with the shippers. What's happened though is we've seen more freight brokerages. And I think it's because they've been the ones who've adopted the tech. They've made those investments. They've invested in customer success. They've invested in sales and marketing technology. And so we're seeing a whole new, I'll say a renaissance of freight brokerage in the last 5, 7, 10 years.
Yeah, totally agree. We've seen it year on year to the Armstrong and Associates. They do some really interesting kind of market sizing work for freight brokerages. The transportation topics folks do the top 100 list. That's also really interesting. And if you put those two numbers together, you can see the growth of the overall market for freight brokerages and the growth of the market for the top 100 freight brokerages. And the overall market is growing. It's great.
Yep. And our buddy Kevin Hill over at Brush Pass Research, he wouldn't have started Brush Pass Research 10, 15 years ago because there wasn't as much interest in who are the freight brokers. Now, all those freight brokers are all buying technology. They're buying factoring services. They're buying a whole bunch of stuff that, not that they didn't buy stuff in the past, but it was a very low tech industry. Now it's very high tech industry and continuing to make investments. And that's why they're getting a larger percentage of freight as compared to direct from shipper to carrier. And I say this all the time. I get calls from little carriers all the time saying, "Hey, Joe, I just want good shipper freight," meaning I don't want to go through brokers. And I always say, find a better broker and just realize nobody's making the kind of money they want to make right now. Because I think sometimes that little carriers are under the impression I'm being ripped off by the broker. And the broker's looking and saying, "Great, I made $100 on this load."
I see a lot of that online, that there are some carriers out there that think brokers are rolling around in Mercedes, and that's our data doesn't support that. That's for sure.
Yeah, yeah. And so you touched on our buddy Kevin Hill's number. So he has lifestyle business, that's the smaller, under 1 million. Then there's the micro, which is 1 million to 10. Growth is 10 to 50 million in sales. Mid cap, 50 to 100 million. Then there's large, and then there's enterprise. You guys are working with the mid, growth, and micro, and some of the lifestyle guys.
Exactly.
So per month, what is the volume or the revenue that you like to see?
Yeah, we'd like to see brokers averaging at least $75,000 a month in kind of total invoice volume. And what that signals for us is that this is a full-time business for them. It's not something that they're doing on the side. It's something that they're committed to. And we're able to kind of service them in an effective way. I think when people are doing a brokerage on the side and they're also doing something else, it makes it a lot more difficult for us as a factoring company to get comfortable. And so that 75 is a good kind of floor for us that we feel most comfortable with. And we take plenty underneath if they're really committed and they tell a good story. And so we'll go ahead and do that as well.
Yep. I think it's also very telling. I'm not just saying this to be nice. My last interview with you, I think it's probably over a year ago, you talked about how to scale. And you guys look at it yourself as not just factoring money, but we do want to partner with you guys so you can scale up your brokerage and get it as big as it can be. Except you don't want it to grow to become a large cap or a.
You can if you want. That would be a win for us. We would take it.
You would take that as a win and say, that's our alumni. We'll be known by our
Right.
alumni because all
Graduated
of our alumni
from
are growing.
the University of Denim. I think we'd feel okay with that.
Yes, you would. So I'm going to drag you into the weeds in a minute. I'm going to ask a whole bunch of dumb questions. So before we hit the record button, we were talking about this new integrated ledger that you guys have. And you told me that the way freight brokerages do accounting is crazy and difficult and complicated, and that you guys have a better approach to it, and that you're bringing this to a lot of the companies you're working with. So first, talk about the problem. And assume we're all laymen. We're not all accounting people. Please explain what is the problem.
Yeah, of course. So in a TMS, you find a shipper you want to work with. They give you a piece of freight. You move it and you got that one thing and that's it. And as for most kind of owners out there of freight brokerages and presidents, that's the thing you're focused on, is moving that one truckload from point A to point B. However, when you take that one truckload and break it into accounting land, it becomes a lot more difficult and a lot more challenging to manage and maintain. The default way for the Logistics of Logistics LLC or any other kind of small business out there is to do something called real-time accounting, which basically takes every transaction and enters it into your chart of accounts, into your ledger, in your QuickBooks or whatever accounting system you use. And so for a brokerage, that can get quite complicated because you have to enter in your receivable, every payable, whether it be your carriers, maybe you use two, payable to yourself, you're recognizing some revenue, maybe you have a factoring fee in there, maybe you've got some money that's held back in the form of a rebate, maybe you have an accessorial, maybe you have an adjustment.
When you say rebate, what do you mean by that?
Yeah, so if you're getting money from an advance, if you have a line of credit or a factoring company or something like that, you're only able to get a certain percentage of the total receivable amount.
So if let's just say I factored something for $2,000, you say, Joe, we'll give you what, 80%? What percent? Okay, so you give me 90%, up to 90%. And I say, cool, thank you for the $1,800. That allows me to pay my carrier and maybe have a little left over, maybe not. But at least you have that monkey off your back. And now, once Denim gets paid, I get some portion of that $200 back.
Exactly. Yep. We'll take our fee and then credit you the rest.
And that's the rebate?
That's the rebate. Yep.
That'll depend on how long it takes Denim to get paid, because you guys are, so if it takes 60 days, I might get very little or nothing. If it pays very quickly, I'll get a little more.
That's right. And so we want you to be, what do they call that, Joe? Incentive aligned with us.
Yep. And so why factoring exists is because a lot of companies that we're talking about can't get the kind of funding that the big guys get. And so in effect, they're selling their receivables. That's what factoring is. And it's a lifesaver. And we'll talk about this more in a minute, but there are some companies that are very predatory, and that it's a lifesaver, but sometimes it has some hooks in it. And we'll talk about those in a minute. But you guys are bringing something that allows companies to do very well in a time that is not easy. And you don't have to do every shipment, but when you need to do it, you can do it.
Exactly. And I would say, like, the start of Denim way back in the day was predicated on our ability to factor small brokerages, which were typically unfactorable by the rest of the market. And the reason why we're able to do that is because we make the payments to carriers on the brokerage's behalf. And not only are we helping you by making payments for you, we pay millions of dollars a day to carriers, but also we're able to basically de-risk that part of the relationship just by handling the money for you. As Denim started servicing only lifestyle brokerages. And as we've grown, we're able to service people much higher up in the value chain, or in Kevin Hill's kind of size segments, to be able to give them the opportunity to access capital and all those kind of efficiency savings at scale.
Yeah. So getting back to it, the complicated accounting we have, I have, let's just say I got $2,000. I factored 1,800 of it. So I got that 1,800. I paid my carrier. Let's just say I paid him 1,750. So I kept 50. And now I'm waiting for a rebate for when my shipper pays Denim so Denim can pay me. I have a whole bunch of line items that I would have to put into my ledger. And you're saying that is not the only way to do business. And by the way, I'm not an accountant, but I do have a ledger. What is the problem? So I know what the problem is. There's 7 or 8 things that I have to list.
Yeah, in a few minutes per entry. So put that at a couple hundred loads a week. It's a lot.
That's assuming there's no accessorial that has to be paid that I missed, and then I have to invoice my customer again. Hey, or an LTL could be a reway, but there's a lot of hassle. So that could be, you said 8, but it probably could be up to 10 if there was a few. Yeah, you missed this detention and this accessorial, and all of a sudden, what for a shipment that you made $200 on or $300 on, there is how much accounting work.
And you're paying a bookkeeper, probably, right? Because you don't have one in-house yourself. And if you are bookkeeping yourself as an owner of a freight brokerage, God love you. But there's a lot better things that you could be doing too with your time every day.
So what's the alternative? Please explain. Like I'm the dumbest person in the world.
The alternative we borrowed in freight brokerage land from our friends in retail. It's called batch accounting. How this works, and I'm not a CPA, so I had to understand this at the most basic level, just like you and everybody else who's listening. The basic idea of batch accounting is that it takes a similar transaction type from a given period, and it basically gives you a batched or like an aggregated number. So if you made $100 10 times, then you have one $1,000 entry. And so you add that one single $1,000 entry instead of the 10 $100 entries. And so what happens is that batch becomes your ledger, and then you need to have some sort of sub ledger or something that gives you the full detail. So you've got that one thing that you need, and then you've got like the supporting detail to follow it.
So I'm not losing any of the detail into my business because I want to know which customers I'm making money on and which customers I'm not making money on.
Exactly. So you have that sub ledger, or for us, our integrated ledger shows you how that kind of ties together, and we can give you basically the best of both worlds, which is clean books and the messy middle, the details if you need it.
So somebody listening today says, okay, so the solution is working with Denim on this new integrated ledger. How are you going to get into their books? I'm not following.
Yeah. So we talked about this a little bit before. We went through this ourselves at Denim, and we've had a couple of our clients go through this evolution of thinking as well. And what it comes down to is, as long as Denim is invoicing your customers, collecting on your behalf, making payments on your behalf, and managing all the accounting that goes along with that, then we have all this data to provide you with the batches that you need and the time frame that you feel most comfortable with. And so it's really easy for us to give you 6 or 10 entries for you to enter in any given time period that you can do yourself. We had a QuickBooks integration. We ran it for quite a long time. It was good for people in the lifestyle and below, call it, segment, but it really became challenging as you got into the kind of micro, mid-market, et cetera, just because the entries were so voluminous. It was really tough to manage.
So does this mean that I have to factor all of my shipments through Denim?
No, you don't have to. You don't have to factor all your shipments through it, and you don't have to. You don't have to have all your customers through Denim either. It'll run right alongside whatever your existing kind of chart of accounts are set up into QuickBooks. But the things that come from Denim will have a little home in your QuickBooks.
So let's just say I did 1,000 shipments in a month, and I said I factored half of those with Denim, and the other half, can I still use Denim's technology for the other 500 that I didn't factor?
Definitely. Yeah. And so we'll help manage the treatment of that too. Yeah.
Yeah, because one of the things, and it's been a while, but I have gotten a demo, probably by you, on Denim. I really liked seeing the dashboard that you provided, which said, hey, here's the margin you're making on all of your customers. Here's your slowest payers. Here's your fastest payer. Here's your high margin customers. Here's your low margin. And I was thinking, big companies, of course, that's easy. But it's the smaller guys, and I can say this, having worked at a smaller 3PL, when you get that kind of data, you're like, holy God, we've arrived. We can look and see who we're making money on.
Look at this. It's amazing. Yeah.
But it's the insights that we need in this business, because this has been a rough 2 years since 2.5, whatever it is, since COVID. Feels like 10 years ago, but it's only been a couple of years. But it's been a difficult market. We've had 5,000 freight brokerages go away. And let's face it, none of them went away because things were going well. And I think some of them could have done better had they had better insights into their business and maybe had a better financial partner.
Yeah, there's some really interesting and depressing stats from the Small Business Administration on percent of companies that fail because of cash flow issues or cash mismanagement. And that's a Having clean books that gives you visibility into how and where and what sort of money you make can help you avoid some of those common pitfalls that I think a lot of folks run into, especially in a cash consuming business like a brokerage.
Yeah, and if you look at this is true for all businesses, but right now, if you look and said, okay, we have 25,000 freight brokers, there's a median margin. Half make that more, half make less. And nobody likes to think, oh, yeah, we're probably on the lower end of that. We're probably in the 10 percentile of margin. No one wants to say that. No one wants to think. You all want to think we're in the top 90%. We don't know unless you get some better accounting. And I think this is maybe a step in the right direction. So I understand the this batch thing. How can Denim help me go make the move from what I'm doing to this batch approach?
Definitely. So we built this product called the Integrated Ledger, which basically provides you with the batch entries that you need. And so you can go into Denim whenever you want. You can reconstruct whatever period in the past you so choose. And then you can provide basically that set of batch entries, and then we'll give you your kind of hyper detailed subledger as well. And so this basically, we do all the hard part for you so that you know what you need to enter and at what period, and you can pull that at any point of time in your choosing.
So how do I pull that information from your system to my system?
Yeah, so it is in the dashboard that you've seen. It's under reports. It said integrated ledger, and then you pick a date range of your choosing. And that's basically it, Joe. It's pretty easy. And then you have one screen that has your 10 entries, and you've got one screen that is your QuickBooks, and it takes you about 5 minutes.
Nice, nice. I also like the story about how you guys came about doing this new integrated ledger that batches things. Please tell that story if you don't mind.
Yeah, we've heard from a lot of our clients they were having like issues with accounting. And it was like, which was weird. It was weird to hear because we have a QuickBooks integration. People would syncing thousands of entries. And so we brought it up to our client advisory board. And we're like, hey, we're trying to rethink accounting. We've heard your feedback. People tend to have a tough time with it. Not every owner of a freight brokerage is a CPA. In fact, I would venture to guess almost none of them are, right? And so the owners of the brokerage are saying, this stinks, but I don't know what stinks about it. It's just not working for me. And the bookkeeper spend for these brokerages is through the roof. And so we were trying to work through what this problem basically means and what the core of this is. And one of our client advisory board members, Alex from Alliance Logistics, who is a great follow, and if you don't follow him, highly recommend, really smart guy, basically said, are we doing this wrong? It feels like we're doing this wrong. Every other industry has figured this out. Like, why are the 6 of us in this client advisory board suffering through this accounting issues? We don't have to put every line item into our quick. It's just not necessary. And so that seemed to really resonate with the other members of the client advisory board. I said, it's funny you should mention that because we went through this at Denim ourselves. We used to put every line item of every invoice that we factor into, we use Xero at the time, but we used to put it into Xero. And yeah, we had millions of entries through the course of a couple of months. And so we switched to a daily batch accounting mechanism. We're like, we should do this for our clients too. And so that's what really inspired the usage of the integrated ledger for us.
Yeah, I think it's telling that you have a client advisory board. That is a very unfactoring like thing to do. I know I'm not saying everybody else in the business is behind, but I factored money in the past. It was a business that didn't particularly cater to my needs.
They just want their money back, Joe. They're going to give you money and they want it back.
But by the way, if I was lending money, if that was my business, I could see how I might get a little uppity. I just kind of go, I have money, you don't. You will bend a knee to the person with the checkbook. I can see how that would happen.
Yeah, I think it's a little humbling being a startup in our position. So yeah, we're maybe not as uppity as the rest of the family offices out there.
I will say this, I think that's a very important point because when I started the logistics of logistics, I was never sure what business I was in. I did some digital marketing, I did a lot of training, I did consulting. And I remember I had made better money working for other people for a long time. And I was always the hired gun that came in and fixed things. And now all of a sudden I was hat in hand guy trying to figure out what to do. and it's not an easy transition to go, I will be humble. But once you get there, it's good. once you get used to the water.
Yeah, a lot better to be humble. This is it's funny because we talk to our clients who are also startups, and because most of them are in that kind of below mid cap segment. And it's funny, I talk to them and we make mistakes like everybody else. And so I get on the phone, I say, we're a startup too. We're not perfect. We're making this right. That's the way that it's got to be. And they're really cool about it. It's kind of nice because we're in the same boat. We're rooting for you. We don't make any money unless you're growing too. Let's do it.
You make a very good point. And I know before we hit the record button, we were talking about the largest freight brokerages and their percentage of freight is gone down in relation to the other guys. Let's just say the other 25,000 to the other 24,000. And we were just talking about why that would be. But you and I, if we had a small company, a distributor or manufacturer, we would probably want to work with a freight broker or a carrier that we knew the owner and that we could call him up and text him. And we all aspire to build big companies and have those great exits and all that. But a lot of customers want to work with somebody where they know the owner.
Yeah, it's a competitive advantage for a lot of those brokers in the long tail of the market. And sometimes people think if you're in the long tail, it's disparaging, but it's a superpower, especially if you can use it in the right way. And the same reason why capital, like through Denim, is more accessible for freight brokerages at the smaller end of the market. A lot of the tech is more accessible for the brokers at the smaller end of the market. You don't need 1,000 employees to run a brokerage and to run a successful, profitable, healthy brokerage. You might need 15.
Oh, I said, there's a guy in your neighborhood who owns like a micro cap, 1 to 10 million, or a growth cap, 10 to 50, or even a good lifestyle business. That guy might be killing it. If you said, you're at a party, you're like, that dude's killing it. He's got the best life ever. And
and he might be the septic guy. Like he might be running septic for your small town. Yeah.
Exactly. So what else did I want to talk to you about? Oh, implementation. So let's just say we're looking at implementing. If I wanted to work with Denim and I wanted to get this advantage of this batch accounting process you guys have, what's it look like if somebody says, hey, Sean, I heard you on Joe's podcast and I want to work with you guys. What does it look like working with you? Do I have to bring all of my factoring to you? Do I have to factor every load? Because I know that is sometimes the approach the factoring companies take.
Yeah, we are like the most flexible factoring company out there. If you come to Joe or you come to denim.com or whatever and get in touch with our team, a couple phone calls as quickly as 2 days if you're motivated to get started.
2 days with a check in my hand, you mean?
Yeah, it's pretty quick. If you're coming from another factoring company, there's some complexities there. We've got to have a graceful exit. But the way that it works with us is for every customer that you bring on, you can choose to factor or not factor each load that gets sent over to us. And then for the loads that you do factor, you can also pick how many days you want to use the money. Let's say if you're paying a carrier that has a factoring company. So you don't want to pay them on day 2, you want to pay them on day 25. We will discount you in your factoring fee for the privilege of factoring that load for such a short period of time. So there's a lot of optionality for you, and you can be as fine-grained at the controls as you'd like, or you can set some rules and some settings and let us take care of the rest. It's really up to you.
Yeah, and I know sometimes you might say, hey, I only want to factor 50% of this one, and I want to factor 80% of this one. And the reason is because that's all the money I need. I don't want to borrow money that I don't need. So I factor and I get that money. And I know this because I've dealt with it in the past. Sometimes when you say, I want to factor this account, it's that whole account from now on. You guys don't force me into that. So if I say I'm working with XYZ distribution and you say, it's up to you which loads get factored and which ones don't.
Yeah, that's right. And so a common thing that I think folks like to use who might not be super into factoring or maybe don't need the money, they don't feel as capital constrained, is that they'll do stuff like they'll set their advance maybe 30 days away. They'll set the carrier payable maybe 25 days away. And then they can work with shippers who pay on 15 days and we don't charge anything because we already got the money. They work with shippers at 45 days. And so you only pay for the money for a couple weeks. We have some Anheuser-Busch, God love them. They make payments twice a year. You can work with anybody in between, and the money comes to you very reliably in the time and date that you want, and we manage the rest behind the scenes.
Yeah. And anytime you're talking about factoring, you got to talk about the early payment fees. Tell me about that with Denim.
Oh, early termination fees. This is a tough situation for a lot of folks that maybe go with the first factoring company that calls them, or maybe they heard from a friend of a friend you should work with so. And when we do things like a buyout of your current factoring company to come over and join Denim, you can get held hostage sometimes. And so we saw one company last year that had a $400,000 buyout fee. It's like a house, Joe. You want to buy a house for the factoring companies. It's insanity. And so be nice to people out there. Everything that goes around comes around. If you've got an outrageous factoring fee, we'll take a look at it for you, and we'll see when the best time is to be able to come around. We'll try and see if we can shave off a bit of it ourselves and take it on the chin. But to all the factoring companies out there that are listening, don't do that to people. Don't be mean.
Yeah. Everyone says, we don't do that. It's everyone else.
It's everyone else. It's not us. Yeah, we somehow come across it once a week. So it can't be everybody else all the time.
So I did a podcast, and I'll put a link to it in the show notes, but I did a podcast with B, one of the founders, and he talked about the idea of partner versus predator. And he explained to me that sometimes, you mentioned the early termination fees, and I think that's the right term for this, is the money, and I could pay you guys back sooner. So I pay you back sooner, and then you have some costs that you have to recapture on that. And so it's not as if there's no fees on that. But B said, we need to recover our costs, and then we may need to make a little profit. He says, sometimes when people, and this is happening in factoring businesses, you end up paying an enormous fee for paying back the money too soon, and more than their cost, more than their normal profit, which makes no sense. But it's the nature of somebody has money and somebody doesn't. And that is a relationship that sometimes is very difficult.
Not super healthy, that's for sure. Especially if you're like, you get a new factoring company.
It's a power imbalance, I think the kids would say.
Yeah, and there's a legal fluency component to this too, where maybe you're not reading through every contract line item with a fine tooth comb, and somebody else is, and they're hiding stuff in there, and And
again, I think everybody feels comfortable with it. Yeah, you got to recoup your fees for the money you borrowed, and you got to make some profit so you can have Sean living indoors and eating every day. But no one wants to say, hey, I paid that money back and I ended up losing money on the deal. I should have just kept it in my pocket. And again, this is what you want. You want a partner, not a predator. And it's a different vibe. By the way, one other thing I want to talk about. You told me approximately 2/3 of the freight brokers are using factors. That's not the top 3,500. So let's just say the last 22,000 in the longer tail of the business. Those guys are factoring. 2/3.
Yeah, I would say not even the 3,500. It's basically anybody outside of the top 100. For any given one, 2 out of 3 are going to factor. Now, there are some in the lifestyle side that don't factor because they're not moving any freight. And there are some way up at the top that aren't factoring because they've got bank capital or they're flush with cash over the years or whatever the situation.
They might be publicly traded.
Yeah. And the 2/3 that do factor, it's pretty common. And it's common because the pay terms for these shippers are all over the place, especially over the last year or so. It's been tough out there to be cash constrained and floating what is an ever slipping set of pay terms. And the carriers are such a large portion of the invoice volume for a freight brokerage, right? So if you're a freight broker out there who's clipping $2 off of every 10, good for you, you're high performing, but that's still 8 out of $10 that you've got to find and send to somebody else, which is a lot of money to get tied up in a brokerage. And so we tell our clients and prospects, don't wait until you're at the end of your rope, right? Don't wait until you've got payments come due and you don't have the money. Get out in front of this and keep a healthy book and a healthy business. We can help you. What's the term? Keep your hands out of the cookie jar, right? So we can help you make sure that your carriers get paid on time and you're not dipping into it for operational expenses and stuff like that.
Yeah, and again, when we're looking at a difficult market, from what I understand, we're not on the bottom anymore. We're slowly creeping out, but
everybody says that, Joe. Everybody says that. I'm waiting for the money to start raining from the sky. It hasn't happened yet, as far as I can see.
But the reality is it's still a low margin business. It has got this complicated accounting unless you're working with Denim. And again, when somebody said this on my podcast a year or two ago, and it really resonated with me, which is if you look at trucking is a low margin business. But if you say the median, here's the median margin, 50% make less, 50% make more. Imagine you're on that lower end of it and you don't even know it because you're not doing the accounting the way you're supposed to do it. And I get it. Probably most small business owners, myself included, don't spend as much time on the accounting as they need to. And they don't recognize which customers they're making money from. It seems like you're making money until you look at the accounting or look at by the time the accounting is done and the payment and the late payments, and maybe you factor some of it, you go, I'm working with that guy as a hobby. And I think we all are probably guilty of that. Any small business is guilty of that. And this is why you need to get on top of the accounting. And I think this is why you need a partner who can help you get on top of that and get you some money when you need it.
Yeah, definitely. It's hard. You're flying blind out there, right? If you're not running the numbers. And so we run some reporting every once in a while. If we've got a client of ours that's flying too close to the sun, and we'll give them a call and say, hey, in case you haven't seen it, right? Keep an eye on some of these spreads because you might get yourself into a tough spot.
Yeah. So I'm gonna summarize and I'm gonna get your final thoughts on the topic. Talking to my friend Sean Smith, and we're talking about brokers are drowning in accounting and how Denim simplifies that accounting, and that they do it with this integrated ledger. And Sean explained it. I think I understand it. It's just really taking something that's very complicated and simplifying it. You'll still have the granular detail that you need. And again, this is one of the reasons I think you want to work with a company like Denim, because tech is in their DNA. That's how they started. They're digital natives. This simplifies the accounting with a batch approach. And you guys work with everybody but the smallest of the lifestyle guys and the biggest of the big who don't need your money. And I like that this came about because you guys had this problem yourself, but also you have a customer advisory board that is guiding your technology roadmap. Another point I wrote down here is this idea of partner versus predator. You guys want to help your company scale. I did a podcast with you. I'll put it in the show notes about how do you scale your freight brokerage. And I think one of the ways anybody who's talking about scaling is going to be talking about money. You don't scale without money. It's scale. Hey, we scaled really quickly with no money. Nope, doesn't happen that way.
You're out of business if that happens. Yeah.
Yeah. Yes. And oh, by the way, we should also say bankruptcies happen in this cycle right now when things start to take off after you've had bad times. So we always see that in the business cycle. Companies don't necessarily go out of business as their volume and their revenues are going down. They go out of business when it starts to spike up after. And so it's really important right now before we get to that next quarter, whenever that quarter is, when everything jumps, you need to be on top of your accounting before that to make sure you're not in trouble. You need to get a partner who says, hey, stop working with these low margin accounts or start getting paid on time, whatever. You need better insights into your stuff. Anyway, enough of my blather. Final thoughts, put a big old bow on this one, Sean Smith.
Come check out Denim. We are a little different than your regular average factoring company. So if you sat on the sidelines because you didn't know that factoring was for you, or you know somebody that had a bad time, we could be a good partner for you as you grow. And the integrated ledger is one of many ways that we're trying to help brokers run better businesses and run better brokerages. And so that's the guiding light with all of our stuff that we're shipping. And we got a lot of cool stuff shipping this year too. Keep an eye out for us.
I love it. I love it, Sean. What I'll do is I'll make sure I put a link to your LinkedIn profile, a link to your website, and the links you and Emily give me, I will put in the show notes so people can reach out and talk to you. And Sean, what conferences will we see you and the fine folks from Denim? I know the answer to this one. You will see you at all conferences, but what conferences are you thinking about?
We've got a handful. So we were just at Manifest.
I saw you guys there.
A couple of Freight Waves is coming up, and we've got some broker carrier and TIA. We go to all the TIA ones. We really like those folks. So yeah, find us at any one of those. Hopefully we'll have a booth. I think we will.
I think I'm going to the Broker Carrier Summit. I'm hoping to get to TIA. There's so many great conferences. Every time I go to a conference, I go, oh, these are my people. I'm gonna get to every one of these. And then I think, I never even went to that one. And then I go to that one and I go, yes, these are my people. I'm going to this one every year.
Another one. I found another one. Yeah, totally.
And then last year, I killed myself. I went to 3 conferences in 3 months, and I felt like I still haven't followed up. I still haven't caught up. You collect business cards. I'm going to reach out and talk to that guy. Nope.
Yeah, I think a good supporting cast is an important part of conference attendance. That's for sure.
I know it's asking a lot, but I would like the conference organizers to just say, we're going to start doing all of the conferences this one year. All the conferences this year in St. Louis. The next year, all the conferences in Detroit. I want 1 year where they're all here. You could even do Grand Rapids. I
don't think that's a lot to ask. That sounds pretty reasonable.
And then one day it's going to rotate. You're going to say, this is the year. Every conference is in.
They're coming to Boston. And I'm going to be thrilled.
Anyway, thank you so much. It's always a pleasure to talk to you, Sean.
Thank you, Joe. Good to see you.
Yep. And thank all of you for listening to my podcast. Your support is very much appreciated. Until next time, onward and upward.
You have been listening to the Logistics of Logistics podcast, where we engage with leaders in the logistics and supply chain community. If you like what you hear, please subscribe, hit the like button, and leave us a nice review on Apple or Spotify or wherever else you listen. Also, please check out our videos on YouTube and connect with us on LinkedIn. We're very big on LinkedIn. And you can also reach us on the logisticsoflogistics.com, our website.